Good morning, everybody, and welcome to the Siler Wealth Management video blog. It's Monday morning, and I've been trying to do my video blogs on Tuesdays and Thursdays, but I thought since we had such a tumultuous week, the first full week of trading, that I should come on and just talk about it briefly. And what I'm going to do is, first of all, I'm going to have to actually read some notes, and I don't normally do this. Usually I just speak and I turn the camera on and I go, but my memory is not as good as it used to be at my age. But I want to go by, this is markets by the numbers. 6, that's the percentage that the S&P fell last week, which made it the worst. Well, the Dow Jones had the worst in history, but the S&P 500 the worst in 100 years. 110, that's the number of S&P 500 stocks that hit 52-week lows. So 20% of the S&P 500 hit a 52-week low. 18, that's the number of stocks in the S&P 500 that were up at least 1%. Think about that. Only 18 stocks were up at least 1% last week. The big winner in the S&P 500 last week, Time Warner, up about 10% on some deal talk. 1, the number of stocks on the Dow Jones Industrial Average, remember it's 30 stocks, that were up last week. That's Walmart. Walmart's the only Dow stock that was up. Keeping in mind, Walmart came off an absolute miserable performance in 2015. It was the worst performing Dow stock, and last week it had a pretty good week. Now, one thing that makes me nervous is that when Walmart is outperforming, that's a bad indication for the economy. So we'll see how long that lasts, because keeping in mind, Walmart does well when the economy is starting to dip into a recession because people start looking for bargains. And also keep in mind that a big chunk of Walmart's revenue comes from government assistance to their customers. So we'll keep an eye on that. But, again, Walmart, best performing stock on the Dow Jones last week. 14, that's the percentage, 14%, that the Chinese markets dropped last week. 14% in 1 week. That's quite a hit. 1,048,976,678,385.80. That was the market decline of the value of all the stocks in the S&P 500 as far as market lost. So over $1 trillion market lost. I assure you a lot of people are playing Powerball today, okay? It's over $1 billion, Powerball. And finally, 99.3, that's the number of voters from the Baseball Writers Association that confirmed that Ken Griffey Jr. will be in the Hall of Fame. 99.3, one of the highest in history. And folks, last week was no doubt a tough week. And that's why we always preach that you want to have some assets that are not correlated to the stock market. So you want to have things in non-traded REITs. You want to have items that do not care if the market goes up or down. Bonds get affected. Everything's getting affected right now. Now, let's look for the sectors that are going to do well. And I'm telling you right now, I am overweighting in the financials. And I can talk to you specifically about that. You want to give the office a call, but I can't give you blanket recommendations. But more specifically, I really like the regional banks. The regional banks, they're smaller. They're not as susceptible to loans overseas. And they're a value down there. I mean, these levels, they're a tremendous value. And that's what you have to look at when you're looking for opportunities. And I have a laundry list of opportunities I'm going to start picking off at some point. I don't know, the market's not going down another 500 points. Nobody knows that. But what I have to look at is look at common sense. Common sense tells me that when stocks are trading at 10 times earnings, or a PE of 10 or 8 or 9 or 12, that's a significant discount to the market. And although the markets can continue to go down, we've seen that, it's very atypical that we see a bear market in a non-recessionary economy. We are not in a recession. Remember what the definition of recession is: 2 quarters of negative GDP. We're nowhere near that. Okay, we're not growing that rapidly, but we're nowhere near that. So between China slowing down, which they're becoming a mature economy, that happens. Between of course, the geopolitical situation in the Middle East, you have oil on the decline, although seems to be stabilizing a little bit there. And I saw some estimates this week that say oil will be at $90 a barrel in the next couple of years. So we'll see what happens there. But you remember, we need oil to firm up so that the oil stocks, which employ a lot of people, can continue to operate. Okay, if we start seeing layoffs, when we start seeing refineries closing down, that's going to be a serious problem because it is a big part of our S&P 500, a big part of our economy. So also, don't forget, you have your tax time is coming up. You want to make your contributions to your IRAs, your 401ks. And also, I have one more point before, and I'm going to draw cruises in the next time. All right, I have too much I have to do as far as gather up who voted and who shared my video. But one thing about 529 plans I read over the weekend, which I want to make sure everybody knows, in a 529 plan, which many of you have, and we offer them as well, it's a great way to save for your grandchild or child's education. They are now considering technology and technology-related items a qualified expense. Remember, 529 plans will grow tax-free, so you can put a bunch of money in and it grows tax-free as long as it's used for qualified expenses, tuition, housing, books, etc. And now they are adding, which is good to see, they're adding computer and related technology. So that would mean computer, printers, hotspots, things like that. So all that would be qualified under an expense for the 529 plan. Hey, this is Lee Seiler, Seiler Wealth Management. Thanks for joining us. I'm going to keep it short and sweet. I'll be back on tomorrow morning. All right, you know how to get a hold of us. The newsletter will be out tomorrow afternoon, usually Tuesday afternoon. So if you want to get on, just go to stockdr.com, my website, sign up. It'll go right to your inbox. If not, we can forward it to you or get it out to you some other way. All right, everybody have a great day. And let's see, what I want to see today is I don't want to see a serious rally on the open. You know, I know we're going to have a mild rally. We're indicating up 70, 80 points on the Dow right now. But I'd like to see, maybe if we do that, I want to see a swoon midday. I want to see a sell-off. I'm looking for a powerful close. That's what we want to see. We don't want to see late-day sell-offs. All right, a powerful close a couple days in a row will tell you that, hey, the buyers are coming back in, which I think we'll probably see. We're way oversold, and I think we'll start seeing that over the next day or so. All right, everybody have a great day. Thanks for joining.